The following is a presentation of TFNN. Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, friends. Welcome to another edition of Breakout Investing on TFNN. Ken Shreve with you. Thanks very much for listening in. Number to use, 877-927-6648. Give me a call. We can talk about this market. 877-927-6648. At the bottom of today's program, I'm going to welcome colleague Eric Jackson. He's going to be a guest at around 3:30 Eastern. Eric is a founder and managing member of a long-short hedge fund called Iron Fire Capital. Going to talk to him a little bit about Facebook and some other recent internet IPOs. So we'll look forward to that at the bottom of the hour. Quick reminder that my show airs every Tuesday and Thursday on TFNN from 3 to 4 Eastern. You can get my show as a podcast on iTunes. And don't forget, very easy way to listen to all TFNN programming is with your smartphone. Just type in tfnn.mobi, tfnn.mobi in your smartphone browser, and you can listen to the stream that way as well. If you want to look at charts along with me that I'm going to be going over on the program today, you can do that. If you're at your PC, you can do it at tfnn.com. Tune into Tiger TV, Channel 1 specifically. The show is archived in Channel 13. And you can also watch Tiger TV on your mobile device now as well. Nice feature that was launched a little while back. A nice, clean, crisp picture, so be sure to check that out as well. All right, going to refresh the chart of the S&P 500, see where we're at here with about 50 minutes left to go. In Thursday's session, we'll see that the S&P 500 is in the bottom half of its trading range now. It's down a little more than 5.5 points, 0.4% to 1310. Right now, the lows put in last Friday are still holding. So this makes the fourth day of a rally attempt for the S&P 500 for all the major averages at that point. So it's not out of the question that we could see some follow-through or even confirmation of a new market uptrend at some point tomorrow, maybe sometime next week, the following week. But if that's going to happen, we're going to have to see the Friday lows hold. As long as those lows hold, we will still be in a rally attempt here, and can't rule out a possible buy signal from the major averages. Of course, the 200-day moving average here for the S&P 500 is really the line in the sand. Currently, it's right at 1281. 1281 is the 200-day line for the S&P 500. And right now it's, about 29, 30 points above that line. So that is a look at the S&P 500. Let's move over, take a look at the Nasdaq Composite. The two indices that I really pay the most attention to at this point are the S&P 500 and the Nasdaq Composite. Selling pressure today in the Nasdaq Composite a little more intense. It's now down 29.5 points, a little more than 1% to 2820. We're also day 4 of a rally attempt for the Nasdaq Composite. Its 200-day moving average, a long-term level of support, is at 2749. 2749. So we'll see what happens here. We'll see if the S&P 500 and Nasdaq are able to hold these longer-term support levels. While we're at it, let's check in on the Nasdaq 100. Nasdaq 100. We'll see that is underperforming today. It's down 31 points, 1.2% to 2516. And some of your Nasdaq 100 components that we like to check in with when I do breakout investing. Let's take a look at Apple. We'll see Apple is down near its session low. It hit an intraday high of $576.50. Shares are now down close to $8, 1.4% to $562.78. $562.78. Hearing some buy recommendations coming out on Apple. In my view, it's still too early here, especially that since it's still trading below its 50-day moving average. This is a very important point about this market right now. It's very difficult buying growth stocks when they are still below their 50-day moving averages. Many have started to rally off their lows. We had that big day for the market earlier this week on Monday. And we've seen a nice little rally off the lows in several names. But you have the 50-day moving average for a lot of former leaders that potentially could be a problem area, could be a potential resistance level. So we're going to be watching the 50-day moving averages, not only for Apple and the Nasdaq 100, but let's take a look at Intuitive Surgical. And we'll see that shares of Intuitive Surgical are down about $6, 1.1% to $524.92. Another stock below its 50-day moving average. And let's check in on Priceline as well. And shares of Priceline down $10, 1.5% to $663. So the Nasdaq 100 names still getting hit pretty good here. Apple, Intuitive Surgical, Priceline have rallied in recent days. I think all three of these stocks is just still too early to buy them, especially since the market is in a downtrend. So that's a look at the Nasdaq 100 and some key components. Volume not real heavy in the market today. Tracking about 5-6% lower on the New York Stock Exchange and Nasdaq. Yesterday on the NYSE we had about 850 million shares, pretty much average for the New York Stock Exchange. 850 million shares yesterday. We're tracking a little bit lower than that today. Nasdaq volume on Wednesday slightly above average, actually, at 1.9 billion. We're tracking slightly lower than that today as well. Some more technical damage being done in the market today. Let's check in on shares of F5 Networks. Okay, F5 Networks, broken stock here, no question about it. Good example of why you do not want to hold on to former leaders. You want to recognize when sell signals start to arise in former leaders. You had sell signals start to pick up in F5 several weeks ago under a lot of selling pressure. You can see the stock is down just over $10 today, 8.5% to 107.78. It is actually below its 200-day moving average now. So anytime a stock breaks below its 200-day line in heavy volume, down the line you're probably going to see a few analyst upgrades due to valuation. But this is a broken stock, and most likely it's going to be dead money for the time being. Same thing with VMware. Remember, it wasn't that long ago. VMware, cloud computing, virtualization. VMware in some trouble here as well. Down $6.85, close to 7% today to 94.67. Another stock that has been under some pretty intense selling pressure. It also dipped below its 200-day moving average today. So VMware and F5 not looking all that hot. Let's check in on some bright spots in the market today, at least when I was looking a little while back. Under Armour. Under Armour still having a pretty good day here. Shares of the athletic apparel maker up $2.52, 2.7% to 97.40. This is a compelling technical setup taking shape here. This is a good one for the watch list. It still remains to be seen whether or not this market is going to be able to rally convincingly from here. There's still a lot of major headwinds, a lot of uncertainty, a lot of volatile back and forth price action. But I like the way Under Armour is trading today, not only because it's outperforming up 2.7%, but its 4-day winning streak has seen it today climb above its 50-day moving average. This is a tall order for a growth stock to do. The fact that it is above the line doesn't mean the coast is clear and that a breakout is just around the corner. Far from it, but it is showing compelling price action today, outperforming, and doesn't seem to be having too much of a problem reclaiming the 50-day moving average. So Under Armour looking pretty good here. Let's also take a look at JB Hunt. That's JBHT, JB Hunt Transport Services. Another stock up 5 days in a row here. Some decent volume. You saw a big heavy volume decline below its 50-day moving average last week. Pretty significant institutional selling. The rally back has been in volume lighter than what it saw during the big move down, but 5 days in a row up, some heavy volume behind the gains, also back above its 50-day moving average. JB Hunt Transport Services, trucking company, looking pretty good here as well. And another name that I've mentioned, not only in my newsletter, Ultimate Growth Stocks, but I mentioned this in a few different places, but Web.com. web.com group, WWWW. Kind of a hard ticker symbol to forget here, but the company basically just serves a niche market. It provides website publishing, domain registration, and online marketing services to small and medium-sized businesses. Web.com Group is a small company with a market cap of $721 million. It is speculative. It is fairly liquid for a small stock, just over 500,000 shares traded a day. Still holding above its 50-day moving average. It is down near its session low. Not buyable here. I could say that really for about 99% of the stocks out there. Nothing buyable right now, not when the market's in a downtrend. But Web.com Group continuing to hold above its 50-day moving average after hitting an intraday high of 15.58. The stock is now down 33 cents, a little over 2% to 15.01. But outstanding fundamentals at Web.com Group. I really like the balance sheet here. I like the growth prospects. They made what looks to be a fairly successful acquisition recently, Network Solutions, and that has resulted in really strong revenue growth over the past, for several quarters in a row, but the first quarter revenue up 132% from a year ago to $91.5 million. Earnings were up 67% from a year ago to 35 cents a share. So you've got good return on equity, good bottom line and top line growth, and pretty good technical picture at this point. So Web.com Group looking pretty good. Let's check in on gold. Take a look at gold, up 0.6% to $1557.50 an ounce. $1,557.50 an ounce. Last I checked, the GLD, remember that gold closes just before 2 p.m. Eastern every day. The GLD is taking a hit today. It is down 73 cents. Not too bad, really. Down 73 cents, 0.5% to 150.89. Still not clear to me that the GLD is ready to start an uptrend here. You've had a big rally last week, and then very volatile trading over the past 3 sessions for the GLD and the GDX. This is the gold miners ETF, the market vectors gold miners. This is in a little better shape than the GLD, but it is GDX is off its highs as well today. It hit an intraday high of 45.28. It is now down 1.2% to 43.90 near its session low. And again, that 50-day moving average here, this blue line, could turn out to be a resistance level. It would really take a lot of buying demand for the GDX to plow through that, and for that to happen, you're probably going to need to see some weakness in the dollar, and it's a good segue into the dollar, because the dollar just has really been cranking. At last check, I believe the dollar index was right around 82.34, up about 25 ticks. And when we come back, we'll take a look at the U.S. dollar index. It did break out recently over a January high, so the trend of the dollar is up for now, which is not great news for stocks, and pretty significant headwind right now. So stick with us, folks. Coming right back, listening to Breakout Investing on TFNN.
It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Thanks very much for tuning in, checking out Tiger TV right now. I'm going to pull up a chart of the U.S. dollar index. This is as of Wednesday's close, but I mentioned before we went into the last break, the U.S. dollar index is up again today. And it was up about 24 ticks, 0.3% to 82.33. Pretty significant technical structure in the U.S. dollar index. It is breaking out over its January 13th intraday high of 81.78. So that is significant. Anytime you get a breakout over a prior high, there just aren't any more sellers around. So it can make for an easy uptrend to be established. Not only for the U.S. dollar index or for any stock that is breaking out to new highs. So it is going to be interesting to watch the U.S. dollar index work here. You do have a technical breakout. Sometimes if you get a breakout like this from one of these cup-shaped patterns, you'll often see a little bit of a shakeout, a little bit of a downward drift, and then that forms a handle area, or what's called a high handle, and then a breakout from that level as well. So strength of the dollar is clearly a concern in the market. I think the euro hit a 22-month low against the dollar today. So that is really what this market is all about right now. The strong dollar is just getting in the way, hurting sentiment for stocks. Economic data today, we had weekly jobless claims. They came in at 370,000, down slightly from an upwardly revised 372,000 the prior week. No big surprise there. Not a bad number. We also had durable orders that mostly disappointed. This was the April report. Overall, orders were up 0.2%, excluding transportation, down 0.6%. The estimate was for orders to rise 0.3%, ex-transportation up 1%. So that data did not meet expectations. Coming up tomorrow, we've got the final reading from the University of Michigan regarding consumer confidence for the month of April. First reading came in at 77.8. Tomorrow should be around 77.5. So mostly unchanged, just slightly lower. All right, let's check in on some earnings reports, because that's partly what's fueling the underperformance of tech today. Let's first check in on network appliance. NTAP, big move lower for network appliance. Stock is down 12% today to 28.84, and it has been a technically damaged stock in a downtrend for quite some time. The value players have been getting their heads handed to them in this stock. And, listen, sometimes you're going to buy a stock that's going down and it's eventually going to firm up and start heading higher again. And some profit opportunities may arise, but that's not really how I go about investing. I tend to look at strong price performers in the market, companies that are expanding market share, not losing market share, companies that are growing earnings and sales nicely, not showing slowing growth. So network appliance, not good news here. It's a storage server maker, cloud computing company. Earnings up 12% from a year ago to 66 cents a share. Sales up 19% to $1.7 billion. But the company guided results for the current quarter well below expectations. So a weak outlook. Another damaged stock here, rallying on results. Let's take a look at Dow component Hewlett Packard. It is up about 3.5% today, trading in its in the bottom half of its trading range. It hit an intraday high of 22.66, up 3.5% to 21.82. But another stock that's really got a long road ahead of it, not only in terms of regaining institutional buying interest, but just a company that is trying to integrate its acquisition of that British software company, Autonomy. They did that for about $11 billion. That's facing challenges. The PC business, printers. I mean, it's just, Meg Whitman is a savvy gal, great CEO, pretty good track record of success, but she sure does have her hands full at Hewlett Packard. HP did say they were going to lay off 27,000 workers, about 8% of its workforce. That's going to generate annual savings of $3 to $3.5 billion. So investors liked that news. Not good, of course, for the people getting laid off. But anyway, HP up 3.5% to 21.82. I'm avoiding this stock as well. And let's check in on Costco before we head into the break. Don't forget Eric Jackson coming up next segment. We'll talk to him about Facebook and other things. But Costco outperforming today, up 1% to 84.18. It reported earnings that were pretty good. So stick with us, folks. We'll be right back. Breakout Investing on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Ken Shreve with you, and as promised, for 25 minutes left to go on the market, let me just give you an update on the major averages here. Seeing a little bit of a rally, not much, but a little bit of a rally into the close here. We've got the Dow up 1 point to 12,497. Tech stocks still underperforming. Nasdaq down about 18 points, 2381, and the S&P 500 off its lows, down a little more than a point to 1317. All right. Joined right now by Eric Jackson. Eric Jackson is the founder and managing member of a long-short hedge fund called Ironfire Capital. He's also a prolific writer. You can see his work on Forbes.com. He's a colleague of mine over at RealMoney.com, Real Money Pro. Happy to welcome Eric Jackson back to the program. Eric, thanks for coming on. How are you doing today?
Hey, I'm doing great. Great to be with you, Ken.
All right. So, a day hasn't gone by. Facebook's still in the headlines. It's coming up on its 1-week anniversary of being a publicly traded company. Just wanted to get your thoughts on Facebook. What went wrong here? A lot of finger pointing. Does the blame go on Morgan Stanley here? And just what's your general take on things? Was it mispriced from the start?
Well, I think it was. I would put the blame. I'd have to put the blame on Facebook because ultimately, it's really the CFO's call, and of course Zuckerberg, oversees the CFO, and he apparently kind of just took himself out of the whole process. But I think he deserves blame for that. I think people forget. Morgan Stanley was the lead underwriter for LinkedIn, which was probably seen as one of the best social media IPOs, if not, one of the best IPOs in the last couple of years in terms of how it juiced interest. The stock nearly doubled, or did double, I think it was on its first day, and really never looked back. I mean, it's been somewhat volatile, but overall, it's still trading right now close to all-time highs. So. Did Morgan Stanley, do a great job there and not here? I kind of doubt it. I mean, at the end of the day, the CFO here for Facebook made the call to upsize the offering, just a couple of days before it happened, and to stick with a high price. And actually, according to the Wall Street Journal, wanted an even higher price.
Interesting.
So it was rebuffed by a lot of big institutional investors.
So the proposed range of 28 to 35, the fact that it was moved up to 34 to 38, that was more a decision from Facebook. I mean, certainly the underwriter is going to give their opinion on that. Aren't they the ones that kind of can gauge demand from institutional buyers and institutional investors in general?
Well, they should have. I mean, obviously they were the ones who saw the book. So they would have consulted with the CFO, and according to reports, I mean, the CFO and Michael Grimes, who's the head of of Morgan Stanley, handling the offering. Apparently, they talked every hour, in the weeks leading up to this. So but at the end of the day, Morgan Stanley has to do what the client wants to do, and so I just find it hard to believe that they would do a great job with LinkedIn and do such a poor job here.
Right.
But a lot went wrong, and don't forget. I mean, I think it's important to remember that I don't know anybody who predicted that that this would have this kind of reaction on Friday and then following through to this week. I mean.
I don't think so either. I didn't. Yeah, I mean, not even close. Not even close.
There was a guy on Twitter who was running a contest for send me in your predictions for where this thing is going to close on Friday, and the winner will send him the amount of one share of Facebook.
That's right. That was Aaron Pinson, right?
Yeah.
Yeah.
And he had 169 entries, and these were smart folks from Twitter. These are traders and finance-oriented folks. And he was telling me the other day that only 5 of 169, predicted that this thing would be, below 40 or something like that.
Right,
so,
right.
And the highest bid was like 150 or something. So, most people, I saw lots of people saying 50s, 60s, 70s. So, maybe that's a bit of consolation for Morgan Stanley
right.
for, misjudging this thing.
So let me ask you this: at $32 a share, it's trading right around $32.40 right now as we speak. You still have a stock here that's trading at a very high multiple based, and this is a company. I want to get your opinion on this. That, in my opinion, is facing a lot of challenges here. When you look at the S1 filings for Facebook. If you dug hard enough, you see this is a company that, even though it's producing strong top-line growth in recent quarters, the fact of the matter is that top-line growth is decelerating. The rate of growth is slowing. What is Facebook going to have to do to start to re-accelerate sales growth? And at 75 times trailing earnings and I don't know, 50 times forward earnings, give or take. First of all, is the valuation justified? And second, what is this company, going to have to do to sort of regain Wall Street favor and convince investors that there is a real fundamental growth story going on here?
Well, I think everybody today who's sort of talking about the valuation and looking at the business and dissecting the S1, they're looking at the business as it stands today. And the business as it stands today is really an advertising business, a display advertising business based on the core website. And I think that's a busted business model. I don't think that justifies the valuation. I think there are three areas that if I was there, I'd be banging the table about them getting into, which I think could be very interesting from a future revenue perspective. I think one is search. I think there's just too much money to be made from search. There's a reason why Google makes gobs and gobs of money, and I think Facebook has a legitimately interesting kind of novel way of doing search because of all their social data that they have about all of us. So I think if they were to get into search, which I think they will because they've already hired a bunch of search people from Google, then I think that's very interesting for investors. I think if their Facebook Connect product that they have right now, which allows, if I'm the New York Times and I want to let a Facebook user kind of log in to the New York Times and share information about what my friends are sharing from the New York Times and so forth, if they use that kind of as a Trojan horse to start to do advertising on third-party sites rather than just on their own site, I think that's really interesting as a second area. Third, I think payments is interesting. There's they have this sort of nascent business of collecting payments for games. They're starting an app store, but they're also doing something called Facebook credits. So, they have a long way to go. They're really just scratching the surface there. But if they can get their act together and make something of that and start to use that with their 900 million users, then I think that's the third area that could be very interesting. But I agree with you that this is a very risky company right now. There are a lot of cross currents going on. I think mobile is a huge threat to them, and there is no guarantee that they are going to be successful as the world kind of transitions away from a desktop PC world to a mobile world.
Right.
The fact is Facebook started as a website, and that's their core business. That's what they know. That's what they're all kind of geared towards. And so I think when you look at other businesses like Google that come from older generations, it doesn't matter how much money they have, how many smart people they have. It's usually difficult to kind of keep supporting the old business from the old kind of generation as sort of a new generation kind of develops around you.
Right. Well, as a high multiple stock, certainly Facebook is going to be held to a high standard when it reports its second quarter results and third quarter results. So I'm just going to take a wait-and-see attitude. This is not a stock that I'm really interested in owning right now. I'm just going to kind of let the dust settle and wait for another quarter or two and see what kind of numbers the company puts up. Eric, I wanted to get your take on Pandora Media. I don't know if you follow the stock that closely, but it is making a nice move today. A company that seems to be doing well. This is a mobile application, good listenership numbers. In your take, can you help me out with this? Is this a viable business that has staying power, and will Pandora, will it be a good solid company going forward?
Yeah, I think so. I wish I owned it, obviously, with today's move. But this is one I've been doing some work on over the last few weeks. And obviously this whole mobile shift that I just mentioned and how it's a potential negative for Facebook, it's going to play out as a positive or a negative for a whole bunch of companies. And I think it's going to be to the benefit of Pandora. I think the bottom line is that people like music in a mobile environment. So music is going to be a winning vertical. And so then you have to say, well, who's going to be a winner within that vertical? And right now, Pandora is the only pure play public stock
first to market.
Obviously Spotify, but Pandora is there right now, and I think they've got a lot of momentum behind them, and I think they can be successful. And yesterday's results did show that in their revenue guide. So the big question was, can they can they grow the subscribers more than the content cost, which hurt them, a quarter ago? And what we saw last night was yeah.
Well, I saw expenses in the current quarter in the report that was released last night were up 80% from a year ago to $100.9 million. So expenses still an issue for the company, but again, good top-line growth. And like you said, music just makes sense as a vertical. How about real estate as a vertical? You look at the performance of Zillow. I heard you talk about Zillow recently. Why don't you just give me your take on Zillow, another company that I would imagine has pretty good potential in the mobile space?
Yeah, I think it's a really, I think it's a great vertical. I think it lends itself perfectly for mobile. They have great iPhone and iPad apps that are super, and they do a good job of user-generated content as part of that vertical. So it's something that I think is going, it's a nice market cap size too. I mean, similar to Pandora. And another one is Yelp. I mean, these are all stocks around $1 billion, between low billion to $2 billion. So the other great thing about them is that I think they are going to be all attractive acquisition candidates at some point. So I very much a fan of Zillow. I think they got a great CEO and management, and serve a great market.
I'm a fundamental and technical guy, and I like Zillow both in terms of fundamentals and technicals. What's amazing, people that like to take shots at Zillow and say, well, I'm not convinced the company's for real. They turned their first annual profit in 2011. Last year, they made 10 cents a share. This year, the consensus estimate is for 28 cents a share. That's up 180% from 2011. Looking forward to next year, they're expected to earn about 65 cents. That's up 132%. So you do have a pretty significant growth story going on at Zillow, and that earnings report not too long ago was pretty strong, no doubt.
Yeah.
So, Eric, all right. Well, listen, appreciate the insight on Facebook, Pandora, and Zillow. Always appreciate you setting aside time for me. We'll talk to you again soon.
Hey, thanks, Ken. It was a pleasure.
Thanks.
Take care.
Okay, Eric Jackson. Thanks very much to Eric Jackson. Still have another minute or two left in this segment, but Eric also mentioned LinkedIn. Let's take a look at shares of LinkedIn. I talked about the growth story at Zillow, and LinkedIn is another significant growth story in the market. A lot of people like to take shots at high multiple stocks like Zillow, LinkedIn. You have triple-digit earnings growth at Zillow, and again, annual earnings at LinkedIn this year expected to be up 91% from 2011. 82% in 2013 from 2012. So LinkedIn, another very real business model. That is the real challenge for Facebook right now. Huge numbers, 900+ million users, obviously a dominant player in social media. How are they going to be able to move away from display? Are they going to be able to monetize mobile? How does the acquisition of Instagram that they bought recently for $1 billion, how is that going to impact the bottom line? So many questions about Facebook right now. Certainly at $38 a share, it was pricey. It's now at $32. Is it a better value at $32? I can't wrap my arms around that yet, which is why I don't want to own the stock. I think a lot of fund managers are gonna wait for the company to report at least another quarter or two of earnings and just see where this company's at, because the bottom line is that Facebook is still a very pricey stock valuation-wise, and I understand that growth prospects are bright, but it's a very expensive stock and still a company that has a long way to go to prove itself. So thanks again to Eric Jackson. Always appreciate his insight. So we'll be coming back for the final segment of Breakout Investing on TFNN. Thanks, as always, for listening. We'll be back in 3 or 4 minutes or so. Stick with us.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit TFNN.com today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks, to Breakout Investing. I wanted to check in with Costco one more time. The stock is outperforming today a little bit, up 1.1% to $84.22. Earnings not too bad, up 21% from a year ago to 88 cents a share. Sales up 8% to $22.3 billion. $475 million of that revenue was due to membership fees. They were up 9.2% from a year ago. Pretty good number there. Same-store sales a little disappointing, however, up 5%. The consensus estimate was around 7.3% for same-store sales. But Costco has come off pretty hard off its recent high around 91, 92. And is outperforming today. Still a lot of technical damage done here. We'll see if buying demand can continue in Costco. Another loser today. Let's take a look at luxury retailer Tiffany. Tiffany, not a good day. Shares gap down, well off its lows. To its credit, it's now down about 7% to 57.44. Value players will be, trying to get into Tiffany at some point. But when you're a company talking about slack demand and weak earnings prospects, that's just not the type of stock that I'm interested in buying. But to each his own. Earnings down 4% from a year ago at Tiffany to 64 cents a share. Sales up 8% to $819.2 million. Currently selling around 16 times trailing earnings, 12 times forward earnings. So it is relatively cheap valuation-wise. But again, companies talking about slowing economic growth in many countries, as well as softness in the U.S. As well. So some bright spots in the market. Let's check in on shares of SSYS Stratasys. This is another small cap company. Good technical breakout for Stratasys yesterday. This is a company that does rapid prototyping systems, three-dimensional printers. Here's a look at its daily chart. Under some pressure here today, down $2.36, 4.3% to 52.13. Let's take a look at a weekly chart for Stratasys. And you'll see, pretty good technical breakout yesterday. This is what looks like a big cup with handle base, but it's a faulty base just because of the huge correction on the left side of the base here. Typically in a cup with handle chart pattern, you want to see that correction in the area of 30% or so. This was a pretty steep correction, which makes the base faulty. Still, yesterday it cleared a swing point of 53.39, and Stratasys does bring a lot to the table. Fundamentally, it does have good growth in recent quarters. Clearly a leader in its industry group. Let's also check in on Amazon. Amazon today, this is an interesting technical setup in the market. Stock hanging in there, still holding nicely above its 50-day moving average after its big gap up here in late April after the company reported strong earnings. Shares of Amazon down $2.40, 1.1% to $214.88. Let's look at the weekly chart for Amazon, and this is a much better looking cup with handle pattern. So the point is, here's the start of the base right here. Corrects in price, starts moving back up, and then it drifts lower. Swing point right now for Amazon is 233.84. A breakout over this level in heavy volume would be compelling, but really at this point, technical breakouts aren't going to have much of a chance of succeeding with selling pressure like it is in the market. So at this point, just waiting for a buy signal from the major averages. It could come sooner than expected. It may take a little while longer to play out. After the close, looking at earnings from America's Car-Mart, CRMT, also teen, girls, and boys apparel retailer Rue21, and Verifone Systems, PAY. Coming up next, the Tom O'Brien Show on TFNN. Folks, have a great afternoon.